Good morning, everybody, and welcome to the fourth in this week's virtual conference, InvestTech. Our theme for the week has been technology's role in sustaining a 20-year advice relationship. And today, as in the last 3 days, we're going to have two more presentations that talk to an aspect of technology and its role in the advisor's relationship with their clients. But first of all, Fraser Jack, welcome to today, and thank you very much for your role in hosting for the week.
Thank you for having me along, Toby. It's been an absolute pleasure.
Look, the feedback we've had about the sessions so far, both in a formal sense through the surveys and also in the informal feedback that I've had, has suggested that we have struck a nerve. And interestingly enough, the registrations have continued to roll in, which I always think is a positive sign. So
yes, I think you just struck a nerve there. You're absolutely right. The presentations have been short and sharp, but very much to the point of what advice practices have been thinking about when it comes to selecting. So it's been there's been some really interesting points brought up through the presentation so far, and I'm no doubt the ones today and tomorrow are going to be the same.
Yeah, me too. So look, before I hand over to Fraser to talk to us about the upcoming sessions for today and tomorrow, just a little about IMAP's events for the first half of this year. Coming up next month, our portfolio management conference in Melbourne on the 7th of March, Sydney on the 14th, and Brisbane on the 21st. The portfolio management issues around how are investment decisions actually made? What are the investment decisions that as portfolio managers or advisors we should be making? What are the issues we should be thinking about in a durable inflation environment, a potentially longer term, we used to say lower for longer, now we're saying higher for longer. I think it was better in the old days. In that sort of investment environment of uncertainty, how should advisors be talking to clients about investments? Those are the things we're going to be talking about at the Portfolio Management Conference, and I'd encourage you to come along for a very worthwhile day in all three cities. And then in May, we'll have our sort of mid-year review, if you like. How are we going? We'll be assembling a group of 10 investment managers to review the experience that we've had for the first 4 or 5 months of the year and what they see happening for the rest of the year, and how they're positioning portfolios, hosted by Robert Talevsky from Activist. So Fraser, over to you to take us through today's sessions and tomorrow.
Yeah, fantastic. We have got a couple of very quick sessions coming up for you, 25 minutes plus Q&A at the end. We're going to be talking about with Nathan Fradley in a second, just on values, aligning values and investment decisions and determining investment decisions from Nathan. Nathan, of course, is a financial planner at the moment with Tribeca Financial in Melbourne, and he also has a software that he's going to talk a little bit about called Ethos ESG, which is a great little tool. Nathan, I'll get you to come on to the screen in a sec. And then after that, we've got Samantha Hawkins from Praemium coming to talk a little bit about growing with clients over time. So a couple of action-packed conversations coming right up. Just also tomorrow, today's not the last day. Tomorrow at the same time, we've got Dr. Michael Kohler coming on to talk about Chat GPT, and in fact, we probably talk a little bit about that today as well. But yeah, that's going to be a very exciting session from Michael tomorrow. So stay tuned, strap yourself in for that one. We've got some Q&A box there. So if you've got any questions, please put the questions in as we go. We will get to them at the end. We'll be able to have a chat about them. These sessions are being recorded, and of course, so if you missed any of the sessions throughout the week, you can go back and grab the recording. Also, just a quick note, as Toby mentioned, the feedback has been great, but we love getting feedback. So after this, we're going to ask you for some feedback. CPD is available for those people that are on the line. If you're watching this on the recording, I'm sorry we can't offer CPD, but CPD for those that stay tuned throughout the whole session. So please stay on the line. Fantastic, Nathan. I'll get you to show your amazing webcam, your face. You've made it into the office today, and thank you for coming in and joining us, putting this presentation together, which we're keen to find out about. Firstly, welcome.
Thank you.
I'm going to let you take it away because I'm really looking forward to this session.
All right, I'm going to kill your screen share and put up mine.
That's it.
There we go. Okay. Thank you, Fraser, for chucking me on here. A little fun fact that's interesting about the mention of Michael's ChatGPT presentation. A little fun fact, scary as it may be, when I wrote this presentation, I just talked into Microsoft's Word dictate function for 20 minutes. This is a topic I could talk about all day, so I didn't need to really write out something phenomenal in that sense. And then I put it into ChatGPT and said, hey, ChatGPT, can you please, and I did say please because apparently we like to humanize the AI. I said, can you please turn this into 15 slides for about 20 minutes with some talking points? And it did. So I didn't make the slides themselves. That was Canva's job. You put it in Canva and then you hit go and you choose the thing you like and put the colors over it and away that goes. But I think that really fits into what I'm going to be talking about today, which is the idea of trust, intimacy, and values and how that plays into the 20-year relationship. And if I can, how do I? Just trying to figure out how to draw it. There we go. I might have to do that each time. Oh, that's not good. So who am I? I'm a director of Ethos ESG Australia. Ethos ESG is a fintech that specializes in basically ethical investment selection and engagement with clients, as well as research and data. I'm going to talk a bit about that today, but not just that. I'm also a senior advisor at Tribeca Financial. I hit my 12th year anniversary on the 2nd of March, which is very exciting for being licensed. So I've been doing that a very long time. I had my business line financial planning, which I sold. And I've had a couple of little accolades over my time, but I am often found talking about anything ethics, ethical investment, the advice industry, financial wellbeing, tech, anything that really interests me on that front, I will be happy to talk about. And my mouse is still not working, so I'm going to ditch it and just have to step forward each time I change slide. So what are we talking about today? The role of the advisor. I think fundamentally, when we think about the 20-year relationship, what we're actually talking about is what is our role for our clients and how does that match that relationship? And where does the value come from? I'm then going to use that to lean into where tech helps and where I think tech helps, but I'm going to focus more on the tech that I know well, which is that ethical investment piece and how that can help. And I'll wrap up and bring all that together into a nice little bundle. So first of all, the role of the advisor. So I think this is really important to ascertain looking forwards and also looking backwards. If you think about financial advisors in the 2010s, the way we operated as an industry, and this is going back to when I started, the way we operated as an industry was product sales. It was, we can provide you investment products. We can provide you insurance products. We get remunerated by commissions on both. We might charge a small onboarding fee. We tended to charge higher percentage fees. And our value was investments specifically, maybe a bit of tax stuff and insurance. So what often happened, and this is, I'm talking very generally here, not to offend anyone who's not been doing this, but we became this gatekeeper. In order for you to invest money, you either had to go to the ASX and choose your stocks, try and get that right, or alternatively, you went to an advisor and they set up a platform, a master trust, a wrap, and went through that process, and then you invested the money. We are not that anymore because technology has come so far along through ETFs and tracking funds and through the ability to just jump on and download an app and start investing money, that our role is not to gatekeep. You don't need to come to us for insurance advice. You don't need to come to us just to set up an investment account or to find out the basics about investments, because there's dozens of YouTube channels and influencers, for whatever opinion you have of them, floating around where you can learn from. It is not our job. And what we've also noticed increasingly is our job is not to be a fund manager. The proportion of advisors who are delivering direct equity advice is substantially decreasing. We've seen that huge rise in the SMA allocation with advisors, because there's a lot of advisors out there who are still picking funds, core satellite, that kind of stuff, and that's fine. But there's also a lot of advisors that are saying, hey, where is my value and my time spent Do I have the capacity to be spending time on this? Do I have the inside connections to speak to the right people to find out what's going on? The tools, the $25,000 Bloomberg terminals that the investment consultants and estimate providers have? Or is my value placed somewhere else? And I think that's really, really important to identify, that the best advisors aren't looking backwards and saying, this is what I've always done. They're looking forwards and saying, well, what does the consumer, what does my customer, what does my client want? And they're not coming to us for product sales. They're coming to us for the human side. And I think that's really, really key when we're looking at this. So when I start to think about that, I break that out. So the major theme of today's presentation is trust and intimacy. But those two things tie inherently with credibility and reliability. So you build trust with a client through creating a level of intimacy, understanding who they are, what they're about. What are their hopes, their dreams, their fears, their habits? With credibility, you deliver that through understanding what your job is and delivering on that. Showing, there's a base level of credibility when you meet a financial advisor. They should probably know the tax rules. You've got a kickstart, but continuing to deliver on that. Reliability is getting back to them. It's the customer service. It's the connection that you continually make when you say you're going to make it. It's doing what you say you're going to do. And when you do all of those things, you put the client first. When they know that the products that they've been put in, because it's still part of the game, when they know that the goals that you've considered, when they know that when you've considered their situation, you've considered that, on paper, it might look better to invest all the money, but given interest rates and your inherent conservatism, we want to just put some more into the mortgage. That's the client interest first. And you bundle all that together and you build trust. And the role of the advisor over the next 20 years is to build that trust and reinforce it every single year. Now, what's funny about my presentation, I've just noticed, is I got this quote from a mentor of mine, Brad Fox. And I just noticed there's 2 typos in it. ChatGPT didn't write this bit. So there you go. So the best advisors won't just have a technical ability or the ability to listen and understand. The best advisors will be able to create behavioral change in the best interest of their clients. So our relationship, that trust is going to be built, not only through understanding. We can sit there and understand all day, but it's actually executing on that understanding. It's actually taking what we've learned and working with our clients over that 20 years to shift their behaviors, to develop new habits and traits. So much of it is behavioral science and not the advanced diploma of financial planning, or now the grad diploma of financial planning. So much of it is what we do in the job, and it's that human side that we talk about. So if we dial in that into a little bit of what our role is right now and what we're doing, I think advisors are largely already doing this, and I think this is only going to grow. And I'm going somewhere with technology with this, by the way. So we're already assessing their goals. We're understanding where they want to be, what they want to achieve. And we also educate them on what's possible. They might come in and say, hey, I want a $7 million house and a Bugatti. And it's like, yeah, but you earn $120,000 a year. Let's maybe bring that back. Or what's possible with school fees, or what's possible with other investments or holidays, or what's possible with changing careers, which is a conversation I feel like I'm having all the time at the moment. And we help them through those processes. What's the financial impact of you changing careers and educating yourself, etc. We'll then go through that product piece. This is absolutely still a part of our role, and understand their product preferences. And this could be how they've been influenced by any particular marketing in the past, where they place trust, institutions they've dealt with before. This could also be what kind of features and benefits of particular products, whether it be insurance or investments, are important. This could be their relationship with, or their idea around fees versus investment returns. But we're also going to educate them on active, passive, ethical, how that might align to their values. We're going to educate them on, maybe for some clients, growth versus value investments, direct equities versus all that kind of stuff, depending on the client. That's how you narrow down that product preferences. Risk profile. Now, of course, are they balanced? Are they growth? The role of the advisor is not to fill out a questionnaire and say, yes, you're a growth investor. Risk profile is so much more than being balanced growth, or balance means growth and growth means balanced in our world, or being any of those things. It's also understanding asset classes they may be inherently uncomfortable with, but it's also tying that back into who they are, what their historical experiences have been, what their future expectations are going to be, and what they're trying to achieve. Their risk profile doesn't just apply to how you invest their superannuation. It applies to the decisions you make about allocating their surplus cash flow. It applies to the decisions they're going to make about whether or not they go for that job, they upgrade that home. All of these things, they have another child. Could they afford it? What's that going to do? All of these things fall into risk profile, and this starts playing into values. And this is really, really important. And I'm highlighting all of this for a very specific reason. You're spending time with these clients, you're building intimacy, you're understanding their values. Have they mentioned anything that might indicate strong values on a particular topic? Their political persuasion, their occupation, their diet, their physical activity, whether or not they believe the moon exists or anyone landed on it. All of these kinds of things are their values, and they're built over time through their experiences. And it's our job to both understand them, but take that information and do something with it. Much like ChatGPT, to a point, took my speech, did something with it and spat it back out. But we can do so much more than ChatGPT can, at least at this point. And this is the scary bit, I think, that I really want to highlight, is the entire world is staring down the barrel right now of technology either being an enabler or an inhibitor. And occupations that take technology in and use that to augment their current processes, i.e., we spend our time with clients, helping clients, creating value with clients. That's the human side. That's what the computer can't necessarily, even if it can do it on a screen with a very advanced AI, it's not sitting in front of them with flesh and blood. And for our client base, largely, especially over the next 20 years, they're still going to want that. Might be over Zoom occasionally, but of course, all of you are probably finding clients want to come in and see you. So the technology is there to augment our procedure. But if your job, if you see your value in some basic modeling, oh yeah, you'll have this much super. If you see your value in, I can put you in this investment or that insurance, then maybe you should probably be a little bit more scared of technology, because that's not what you do. And it's not what your clients perceive your value as. Our role over the next 20 years is to build trust through intimacy, credibility, reliability, and best interest. Our role is to inherently understand our clients and meet them human to human on a level that technology can't do. And that is an extremely expensive and time-consuming task. And we've already seen that average advice fees, $1,500, $3.5 grand, $5,300 by most recent research. That's not just because of, the legislation doesn't allow it. There's plenty you can do already around the legislation to adjust and pivot and move. And video SLAs is something I'm a big fan of. I'll talk a little bit about today. But that's because we are people and we want to earn a certain amount of money. And I'll allude to that around this affordability of advice argument. And my opinion, of course, but I talk about affordability of advice. Every single survey that surveys clients comes back with a figure of somewhere between $300 to $500 of what they would pay for advice, whatever advice means to that person. Let's double it and say it's $1,000. If you've got an advisor who wants to earn $150,000 a year, they should probably generate 3 to 4 times their income in earnings. You're looking at somewhere between $450,000 and $600,000 a year revenue. At $1,000 a pop, that's 450 to 600 clients. I don't know how much time you can spend understanding them and getting to know them intrinsically in that. And I imagine you'll find yourself in a bit of a rabbit wheel, just pushing them in and out, in and out, in and out. And I think you'll probably find it really hard to compete with computers at that price point. Advisors are a premium service because we are a premium amount of time, because we are worth the time we spend, because we have the skill sets to both understand a very unique skill set to understand people and back that up with economics, with taxation, with structures, with trust, and all the fun stuff. And then understand products, sift through that, and bring that back to a client and communicate and educate them in a way that no one else can, because advisors are a very special breed of people. Not everyone can be an advisor. And I think that's really, really important to remember. So we're going to need more time. This slide, there's probably a bunch of stuff on this I'm not qualified to talk about at all. But this is my shower thoughts, sitting there waiting for my food to microwave kind of notes in my phone stuff. This is a list, a comprehensive list of everything I think advisors need help with from a technology perspective. And where, with use of technology, we can save an enormous amount of time. And I'll quickly run through it. But your client portal and communication is key. The initial fact find, the ability to upload documents, and security is really, really important. It's that time-saving component for the client. It's removing friction. And if we go back to what I was talking about before, that security piece is really important because clients want to know their information is secure, especially after all this, but they also want to know that they've got the choice to be able to navigate through something nice and easy. So UX is important. And I think there's plenty of these around, but I don't think there's many that really nail the UX to make that flow easy. You've really got to encourage your clients to get on board with that. Then process, I think we've got plenty of these ticks done, CRMs, automation, compliance, FDS, storage, jobs and tasks. Apart from a bit of cybersecurity where our industry is lacking, and I'm sure, Fraser can talk about that for days. I think that's really something that we've got down pat as a technology perspective, but also a real need. Notice these are usually two separate pieces of technology. Facts and feeds, this is something we just haven't got. And there is some products out there that'll give you budgets to some extent, but I'd love to have ATO portal access, but I also love to have an ATO portal feed. I'd love it if all of my insurance products fed into one place, because every insurer uses different APIs and different language. And one insurer lists 10 policies because each feature is a policy according to their data, and the other insurer has one line for all 4 policies. We don't have a clear and conducive method of obtaining facts for something we've been dealing with for 30 to 40 years. And then on top of that, ATO Act portal access and the rest of it. If you read QAR yesterday, that was mentioned in their portal access and potentially a centralized database of all these things. So that's nice. But facts and feeds are really, really important, especially when it comes down to understanding budgets and cash flow and challenging clients. I think modeling is something we've gotten to a point and we've kind of got lazy with. Instant current scenarios. I know there's software out there that does that right now. As soon as that fact finds filled, bang, you've got your current scenario. Easy proposals, that's being done right now as well. Clear outcomes. What I mean by that is I don't want to have to look at some modeling and say, okay, what's the difference between scenario A, B, and C on super? Oh, that's this number, and that's that number, and that's that. I want to be able to go compare these 3 scenarios and spit out these metrics, and bang, I've now got a summary of the benefits of the advice or the pros and cons from a specifics perspective. But something I think I've never seen, and I could be wrong. And if someone's doing this, absolutely, please email me. Historical lookbacks. You're talking about a 20-year relationship with clients, and we're talking about using technology. And every time you review your client, you might jump into Calm, duplicate the scenario, and run it again from today. But why don't we have, it running with frozen timescales for the last 10 years? In 10 years' time, when I'm sitting down with the client, I should be able to sit with that client and go back and say, when we first met, these are the things you feared. These are the things we were going through. This is your financial situation. These are your values. And this is the journey we've come on. And this is the value I've created over 10 years. Not just each year, always looking forward. And that value, I don't think we've done that well. And again, if someone's done that well, please let me know. And then engagement tools. This is an area that I do work a lot in, within the ethics space. And I'll obviously talk to that today. Reporting, illustration, risk profiling that's, easy and client friendly. And video SOAs, I work with the FPA on that project. I'm a massive advocate for this. The statement of advice is an advisor problem. It's not a client problem. It's an engagement issue. It's friction. We've created this 70-page document. Legislation hasn't. So I think that's really key when we're looking, at all of the technology that we have is what have we already got, but where's their gaps and what problems are they solving? Because all of this stuff frees up time. If your client portal and communications down pat, you have everything you need ready to go in a secure manner. Your process automates all your things and everything moves through. You just pick up a file and you're ready to go. It prepares a presentation, you take that through. Your facts and feeds are accurate. You don't need to spend time deciphering bank statements or downloading a close enough budget to delete everything. The modeling's already prepared and you can jump through and chuck a couple of scenarios in, and then it spits out the financial outcomes. So you can take them back and spend time on the emotional side, that qualitative side. The emotional basis for what is inherently the financial basis for what becomes the emotional decision, and you engage with technology on that front. So that's a little bit of a rant, I suppose you'd call it, but how I see the technology world enhancing that process. Coming back to that then, all of those things, trust, intimacy, credibility, reliability, client interest first, what that's allowing us to do is create that sense of safety for a client and that ability to choose to make the decisions they want to in their life. And fundamentally, if you can do those 2 things for every client, you do that through financial advice, but also through all the other things. If you can do those 2 things, you'll have happy clients. And if you can do that for the next 20 years, you'll have a happy client for 20 years. And if you can do that and look back at what you've done on the way, you'll have a client that refers all of their friends to you. And you'll have a good friend. You yourself will have a great friend. And I know there's plenty of people who've tuned in today. My longest client's 11 and a half, or just over 11 and a half months I've had them, years I've had them. I know them intrinsically. 20 years is even longer. Now I'm going to talk a little bit about Ethos ESG. This is the product part of my product part of it. So this is what, ethical investing is, what I live and breathe. I talk at a certain pace through this presentation. When I start talking about ethical investing, my pace just runs amok. I talk way too fast. But basically, Ethos ESG is a US-based fintech that I got involved in very, very early. We look at the holdings, so companies. We have 10,000 companies assessed, 9,000 funds, and we look at the holdings of individual holdings. We assess them for over 300 metrics. We put over 70 screens over them, and then we bundle them up into the funds, and we look at how the funds engage, how they vote, what kind of shareholder advocacy work are they doing, and we rate funds and companies accordingly. That's our baseline product. But we also do a lot more. And where I've seen a lot of our activity is actually in that center section. I'm going to talk a bit about that. But for financial advisors, they use that tool. They'll sit in front of a client and they'll go through what causes are important to them. So it's just a fact find tool with a bit of an online. They can click on it, they can iPad it. But most of our clients actually like doing it before they come and see us, and then we decipher it. It's still a conversation tool. You can really unravel that. It doesn't have to be someone who is left leaning to get involved in this. The causes are things like healthcare or education, not just the environment. Well, I don't know why that's inherently left leaning. But then it allows you to take that information and do research. So you can look at the universe of funds that you've got available to you, put the client's values over it. And what it does is it personalizes the ratings for what the client cares about. And a good example of this, I was speaking with Care Super the other day, and their base rating is around 65. But if you care about gender equality and climate change, their base rating jumps to 80 because they've got a really low emissions rating, as in low carbon emissions, high rating. And they've got really good ratings across all of the companies they hold for gender equality. It's an area they focus on. Interestingly enough, that also aligns quite strongly with their demographic. So what that allows you to do is, instead of saying this is good, this is bad, it's actually saying this is aligned to you, this is not. And then the ability from that to then dive into it and go, okay, how did you get to those figures? We're transparent with all our data. We collate data, we don't create it. So we just say, this is where we got this from, and we bring all that together. And with that, you can research, you can build a portfolio, and you can report on that in a clean and client-friendly manner. So we call it ESG done easy because that's what it is. I want advisors to be able to sit down with a client, be confident and comfortable to have that conversation, and at the end of the day, get a result that's both really compliant, shows all the opportunities that they've assessed, and is client-friendly in the way it's delivered for someone who might not have a great ethical investment understanding. So we also do a lot of work on philosophy consulting. For SMA providers, we've actually seen huge growth in this space. There's a number of people probably tuning in right now that use us for this, and that is building the portfolios, whether they be direct equities, whether they be funds, whether they be a mix of both. And that's ESG data, that's ESG risk data, which is a separate data set altogether. It's impact calculators to show the value of, or the implied impact of that portfolio versus something else. We do a bit of work on sales consulting and product design and portfolio construction, and then just supporting their advisors. The advisors that use their products come to them and say, I've got a client that cares about climate change. They can run that through and provide that. So we do a lot of work there. And then we've also started doing a bit of work with fund managers and super funds, obviously much larger, much slower moving, but you might see some stuff popping up in the near future around that. And we're doing a lot of work in that space as well. So we work along a range of areas, fundamentally just trying to change the nature of how people work with advice. I just took a couple of screenshots. You can sort of see those causes there, the output that comes outside of that, the reporting and comparison there, and the data that comes off the back. One thing that may be an interest to people who've tuned in today as well is something we've launched in the States that hasn't come out in Australia yet. But I think when you talk technology over the 20-year relationship, this will come back up quite strongly. And Fraser, you might be able to tell me if someone's talking about this kind of thing already, but direct indexation. So direct indexation is where you say, Fraser, myself, and Toby all have the same portfolio. It's called S&P 500, but we all have 30 different stocks, because in the Ethos context, we can put our values in and produce something with a certain tracking area, with a certain sector weighting, with a certain asset allocation. And within 5 minutes, it builds a portfolio for that client. And with technology, you could have 200 clients all on the same option, but with completely different portfolios that you can report on. And I see that personalization in the future really coming through strong. So I think just to wrap up before Fraser and I have a bit of a chat, fundamentally, the role of advisor over that 20 years is to create that sense of safety and that ability to choose. Technology enables us to do that. And when we have more time to spend with our clients, we can drive behavioral change, which will get real impact for our clients, which then technology can further enable and then show them how far they've come. And that allows you to create a business that's actually viable for that 20-year period, which is, I imagine, something that a lot of people right now are wondering in this game. Thank you very much.
Nathan, thank you so much for presenting today. Quick couple of very, very quick questions before we move on. I love the idea of having a care factor needs analysis tool or a risk profiling tool. Tell us a little bit about from the client experience when they come in and they'll start talking to you and you'll start introducing how you talk about their values and what the things that they care about. How does the client change from not knowing what to talk about to actually knowing, be able to give you genuine answers about how they feel about things?
I think there's sort of two parts to that. So NetWealth released a report last year which talked about a sort of front-end identification, like what kind of person are they? So if there's someone who's a believer, as they call it, or someone who is a pragmatist that we're willing to talk about it, that's your first barrier. Like, does this person actually want this discussed? You'll be surprised at how many are in those two camps though. But yeah, I think that's your first barrier. But the next part is, inherently your job in that meeting is to understand who they are. And they let off so many things about their situation that can bring that up. And then what I found the best success with advisors that they're using the tool, whatever tool that might be in values, is to have it just as part of our process, because that enables that. But then linking that back. So a lot of the work we do, I always talk legacy, and in legacy as part of their goal creation, we talk things about what kind of life they want to lead, but also what kind of impact they want to have. That's not just about their investments. That's about how they raise their children. Yeah. That's about the community work they might do in the future or now, that kind of stuff. And at that point, I find that is a golden opportunity to bring about what about your investments did you know? Okay, well, part of our process is we will go through this, and then you bring up those causes. And those causes aren't, there's a sort of climate change is one of them, but outside of that, they're pretty general things. What do you care about? Everyone cares about something. They may generally say, I just care about returns and low fees. Great, that's answered my question. But that's not a problem. That's awesome because it's enabled that conversation. And then from there, I find that there is the believers that are like, yeah, absolutely, we're doing this. But a lot of people are still sort of in the middle. And the best process around that is to be able to say, like Tim Henry does this just ridiculously well. He's at Aspire in Melbourne. He sits down and just says, and we do the same thing at Tribeca, we have a neutral approach. We are agnostic for your outcome. Here's what it looks like if we went index and super low cost. Here's what it looks like if we went ethical. And here's what the difference would be in values to align to you. Here's the price, here's the historical performance.
Yeah.
What speaks out? And you will always get an answer.
Yeah.
And so that really enables that conversation.
Nath, we're going to have to cut it off. Thank you so much. How can people get hold of you quickly if they want to continue the conversation with you? What's the best way?
You get the slides. I chucked in a contact details one. If you want to book a demo or reach out, they're the details there. If you just want to jump on and have a play with the software, you can do so. And I chucked in Brad's details there as well for anyone who's interested in going through that process.
Fantastic. Thank you so much. Yes, if you want to check out Nathan's details, send them a message or jump on, get a demo. It's a great little process to go through and have a look at how you might introduce it into, even if it's just into your existing needs analysis. So thank you, Nathan. I'll get you to stop sharing there and turn your camera off as we go through. Now, our next presenter, Samantha, can you pop your screen on, your camera on as well and start presenting your slides? Thank you so much for joining us today. Now, of course, you're from Praemium. You're going to have a wonderful presentation. I'm sorry we've taken an extra couple of minutes.
That's okay. I'm just trying to figure out where my camera.
That's all right. We'll keep going.
Yes, please do.
So we're talking about all things in longevity in a relationship and how technology can be involved. Obviously, there we go. Nathan stopped. We'll get you sharing.
There we go. Thank you. That's what I couldn't find.
Thank you. Welcome along. Thank you so much for joining us. I know you were thrown into this sort of late notice. You weren't on this.
I am not Martin Morris. If you're dialing and expecting Martin Morris, I apologise.
We thank you so much for joining us nonetheless. So I'll let you share your screen and click through your slides.
I'll do. Thanks, everybody. Thanks, Fraser. Yes, as I said, obviously I'm not Martin Morris. Martin, unfortunately, got called away early this morning. It wasn't able to present today, so I've jumped in. So hopefully do this justice. It definitely feeds in on a lot of the things that Nathan was saying, a lot of the things that we will cover today, build on the things that Nathan pointed out as being really important. So looking at building longevity in your advice relationships using technology, it's something that Praemium is quite passionate about. We are a technology company, that's where we started, and then built our platform on top of the technology. So we feel we're in a really good place to assist advisors with this issue that we're all facing at the moment. Obviously, our disclaimer. What we'll have a run through today, obviously we all know already, everyone on the call knows that the importance of building those strong and integrated advice relationships is essential to ensuring the longevity of your business and the success of your business. But with all the distractions that you're facing, whether it be legislative, actually running the business, actually seeing your clients, meeting your ongoing education requirements, you really need assistance in order to ensure that you can deliver this personalised approach that helps build those relationships and maintain those relationships with your clients in a really efficient way. So as Nathan mentioned, technology is really imperative in this, but it must be the right technology to ensure that you're not just delivering a generic solution to your clients. You are able to tailor a digital solution and ongoing contact with your client in a way that's personalised to them and meaningful to them. So we're going to run through a few things today that will show how different technology platform, Praemium in particular, can help you with meeting these issues that you're facing. Just a quick background on me before I start. I've been with Praemium for about 6.5 years now, and prior to that was an advisor for about 20 years. So when I say we, I'm still somewhere in my soul, I'm still an advisor, I think. Forgive me if I say we, the problems we're facing. I know I don't really face them that much anymore. So this is what we're going to run through. The first step, obviously, and the most important thing is for you to understand your client. There's no point building out a client value proposition that can be one of the best documents in the world if it doesn't actually hit the mark with what your clients want and need. I like to think of it in the way of if you're putting a destination into Google Maps of where you want to go, if you don't know your starting point, if you don't know where you are now, Google Maps will never get you to where you want to go. The same applies when looking at your client value proposition and how you deliver your advice model to your clients. You may have seen this if you've seen a Praemium presentation before. I'm sure you will have seen this iceberg analogy. Not getting into the detail of it too much, but we're happy to obviously send you some more information on it if you would like. But this shows the things that are important to clients and what they value. And again, feeding off what Nathan says, it's the human interaction. It is the relationship with you. If you look at the things that are above the line, they all relate to items as part of the advice process where the advisor is integral. So the ongoing personalised experience, the identification of their goals and needs and how they're tracking to their plans. Underneath the waterline, there are a lot of things that you have to do on a day-to-day basis that the client either doesn't understand, doesn't value, doesn't really see the need for. And that, you know, things like your portfolio modelling and the time it's taken to repair those SOAs and rebalance portfolios and so on. So that feeds into, you know, the SMAs can obviously take a lot of these items away. But what we need to focus on is the things that the clients do value. So they want to see an advisor that understands them, that has shared values. And the only way we can determine that and they can build that trust in you is by those ongoing interactions with you and that face-to-face meeting. As you can see, most clients do want that face-to-face meeting, and only 17% want a digital-only relationship. It's not to say they don't want some sort of digital relationship, but only very few want a digital-only relationship, which I'm sure would come as no surprise and is pleasing for all the advisors on the webinar today. So the first thing you need to ask in order to start building these long-term relationships and ensure you've got a business model that is successful in maintaining those relationships is really to think about that first question: where am I now? How am I going to get to my endpoint if I don't know exactly where I am now? So who are you serving? Have you got a niche market, or are you looking at a broad range of clients that you're trying to meet their needs? What do they value and what do they need? And how do you deliver that efficiently and affordably? Obviously, trying to build a personalised approach, most people would think then that that's going to cost time and money within the business. So we need to look at how we can use technology to build a personalised solution to communicate with your clients that is efficient and therefore affordable, and that flows on then to the cost of the advice to your end client. And also it needs to be able to adapt and change as your business changes over time. So as your clients are aging and their needs and wants change or their goals change, and as your clients change, we need to be able to adapt the offer that we have to ensure that we're still continuing to meet their expectations and their needs. So step one on that journey is really understanding where you are now, putting that, that start point into Google Maps and working out where you need to get to. When we're looking at the digital engagement, what we need to first think about is what are the touch points that we need to look at. Some of the research shows that most clients, it is a lot of millennials, but research is showing it's more broad than that. They believe that advisors should have a digital solution, and 40% of customers prefer self-service over human contact. I know in certain aspects that's certainly me. If I'm trying to make an appointment or a restaurant booking for something, I do tend to find somewhere that has got an online booking solution. So that's something that sort of impacts all demographics, I think, and is changing a lot over the time that I've been working with Praemium. We've been seeing this type of research. So 50% of clients believe that you should have a digital solution. When you're looking at the people that you partner with, the technology that you partner with, you therefore need to look for a solution or a technology that provides you with the ability to communicate with your clients and provide them the information that they need on an ongoing basis. So the picture you can see there is the Praemium investor portal. This has been in existence for some time. Before I started with Praemium, even this investor portal was built. We built this out before we actually enhanced our advisor experience because of the recognition of the need to engage your clients and for your clients to be able to access the information that they need. So the important things there, as you can see on the left, is that clients need to be able to access their information as and when they want. So up-to-date information on any device, whether it be on their laptop or their phone. That this portal can also be used for advisors to communicate with the client. So whether that be through obtaining digital acceptance for fee consent, dare I say, or any other forms that you need signed. In the Praemium portal, you can also use it for any forms that you require, not Praemium forms, but it might be an ROA or something like that you need the client to sign. You can send those through the Praemium portal and have them the client sign. So that allows for that ongoing client engagement. You're sending them back to the same source all the time, so they're regularly engaging with their investment journey. The other thing that you can do is looking for a document that publishes, a portal that publishes documents. So when you're creating your client review reports, you can send them to the client through a portal, and that brings in also security, better security factors, which we'll talk about a little bit later as well. It's efficient. You can send bulk number of reports to bulk client group right across your portfolio or your client base. You can personalize those reports. You can add things to them, and you can also just send any document that you require. So not necessarily a report on their portfolio, but it may be that it's minutes of the meeting that you've had with them, the ROA that you've just prepared, the video SOA presentation that Nathan mentioned, or just maybe a newsletter that you send every quarter to your clients. That can all be done through an online client portal experience. So great that there's an online experience. You can communicate with your clients. You can send them reports and information at a very timely manner and in an efficient way for the advice business. But what research shows is that engagement and that communication must be meaningful and must be tailored for the client to feel that you understand and value them, and to build that trust and continue to build that trust within that relationship. So we look at some information from some research here, is that 55% of clients believe that the communication they receive is too generic. And 34% would increase their engagement with their advisor if they felt that they were receiving a hyper-personalised service. So again, that's something that is probably no surprise, that we realise we need to deliver this information, but how do we go about doing that? How do we go about sending client information that is meaningful to them and tailored to them in an efficient way? Looking at the premium reporting suite, the screen you're looking at here is probably step one of building up a tailored and personalised report pack. This allows you to set strategy templates within the system. So set a strategy template that is relevant for your business, so your asset allocation profiles that you've chosen to run as a business, and then you apply them to the client. There can be as many of these as you want, so you may have a range of 5 that you then apply in bulk across your client base, or there can be, you know, individual bespoke strategy templates for particular clients based on certain needs. So you build these strategy templates into the system, save them once, and then when you run the report, it shows the client and you where the client sits in accordance with their asset allocation. Are they in or out of range on each of the different asset classes that you've set for them? So nice and easy to see exactly where they sit, and easy for the client to see what's going on. And if you're recommending some changes, they can clearly see why and what the reason behind that is. The next step is then also looking at benchmarking your performance, which can be problematic. Not always the case that benchmarks that are available are appropriate to the asset allocation that you've set as a business. So within technology, there will be numerous benchmarks, obviously, that you'll all be very aware of, that you can use to benchmark your client's performance. But what you can also do in the premium technology is create a composite benchmark. So that is one that is specifically tailored to the asset allocation of your client's portfolio. And that way you're getting a true comparison to the performance of your portfolio to a benchmark that is appropriate to the client. Next is then creating these customized reports. So sending reports to a client, fantastic, you need to keep them up to date, need to keep them on track. However, they also need to be tailored to suit. So within the technology, you can create numerous report packs, whether it be by client type, by the tiering that you apply within your business, whether it be by the investment type, whether it be for an SMSF, a retail super, or a non-super investment. You'll have different report packs. So you can create these different report packs in the system, have them saved there, ready to go. And so then when it's ready to run, time to run review reports, all you need to do is select that report pack that's already been created. What you can also do in the system is add your own pages. So it might be that you want to add a cover letter to the reporting that's in the system. You might want to add a market commentary that you've put together yourselves, or in conjunction with your asset consultant that you might be using. Those items can be uploaded into the premium technology, dragged into the report pack, and then when you run your report pack across your client group, they will receive their individual report pack as tailored to them, with those items maybe top and tailing, you know, the cover letter at the front and the market commentary at the back. And then you can publish those to the investor portal, as we mentioned before. Taking it one step further, you can build your own reports. So it may be that you don't necessarily like some of the premium reports, or you like specific information from those reports. So you think, well, I would like to include that graph, that table, and that information in my own template. So you have a review document maybe that you've prepared, and you just want to pull through the relevant information from the technology to populate the report that is tailored for your clients. That's very easily done. In the technology, it's just a simple copy paste of the code into your Word document, upload the Word document into the reporting technology, and again, you can run that document, or that bespoke report document, across single clients, groups of clients, or the entire client base. So as you can see there's a number of ways in which we can build reports that are personalized, that are appropriate to the client's needs and values, and be able to share them very quickly and efficiently. So from a business point of view, it's not taking a huge amount of time once you've gone through that initial stage of setting up. So some really important aspects there. Just checking the time, make sure I'm not talking too much. I've covered all that. Okay. One thing that's important another thing that's important when looking at this digital journey that we're going on with our clients, as much as we're sharing this information online, we have to show empathy. And it's probably quite difficult to sort of think about how could you show empathy when you're, engaging with a client digitally. Digital empathy is basically meaning to show or apply compassion and emotion when engaging with our clients digitally. And the way we go about doing that, apart from what we've already covered in making it personal to their particular needs and their particular portfolio, is to make sure that we're engaging with them at times that it's appropriate and in ways that they value. So as I said, it's really about building that personal experience that shows that we really understand the position they're in, what they're going through, and engaging with them at a time that is appropriate. In Praemium, we've got an artificial machine learning technology that has been used to identify patterns of client behaviour. So over many years, we've been tracking and can identify certain activity or certain behaviours that clients demonstrate that indicate to the advisor that there may be cause for concern, or there's an issue going on that may call out to you that this is probably a good time to get in touch with your client. So an example is that we track the interactions a client has with their portal. They start logging in more regularly, different times of day, and looking at what they're looking at. If that type of behaviour mimics the behaviour of clients who have closed their accounts in the past, then we will alert you in a dashboard so that you can see this client maybe is going through some concern. There might be a life change, or they may be concerned about markets, and maybe it's a good time to reach out to them. So that helps you. The digital engagement is therefore really helping you to engage in an appropriate way with your client at the time that they need it most. Also, things like alerts for issues that are going to impact them, whether it be maturing term deposits, a model SMA that's closing and you need to communicate with your clients. There's a corporate action that needs acting on, and you need to reach out to your client for a decision on that. So looking for technology that can help you understand the client, what they're going through, and alert you to things that you maybe need to be aware of at the right time. This is definitely Nathan's passion, so I won't even begin to try and match that passion that Nathan has on ESG. But we do need to align the strategy that we're communicating to our clients with their values. We all know I don't think anyone needs to know this any more than they already do. It's such a strong topic at the moment that ESG investing is really becoming more and more important to the broader community. Again, it did start with millennials, but it is it's expanding, and it's really impacting, as you can see by the numbers there. A large majority of clients are really wanting to invest in a way that meets their values, or to avoid certain things within their portfolio. With the Praemium technology, we have some ESG screens built in a similar vein to the Ethos ESG screening. Not probably as much detail as what Nathan just went through, but we've created this ESG screening and an insights report that allows you to run an ESG screen across your client's current portfolio and show them what the impact they're having is at the moment. So you can see in the top line there, it shows you across 9 different screens what investment the clients currently have that has exposure to these different areas. So that allows you to really have and create meaningful conversations with your clients around what their values are, what's important to them, and how we can address these concerns when we can very clearly see the impact that their investing is having. So you can use these tools, this ESG screen, to identify what impacts that the client has. And as we all know, everyone's ESG is different. So this type of detailed screening allows you to really tailor the ESG solution that you're offering your clients to their particular concerns. once you've done this report, you can, and you identify that yes, there is exposure in an area that the client is not happy with, you can then apply a screen, one of the 9 screens at the account level, and that will automatically screen out the stocks that are causing the problem. And then you can obviously run that report again and see that the impact has been removed. So really giving the clients power over the solution and how they're investing, and you're able to really clearly demonstrate to them that you've understood what their values are and you've heard them and you have addressed it by removing exposure to assets that would cause concern. Obviously, there's also, a huge number of ethical investments available across the board more broadly, but this is quite a tailored, bespoke solution for someone who has that real specific desire to avoid certain things. Another thing that you're probably hearing a lot about lately is the importance of clients wanting to have a single view of their wealth. So a lot of platforms are really trying to build at the moment the functionality to be able to bring all the client's wealth into one view. The premium technology is built on this sort of philosophy. This really feeds into the emerging wealth, emerging affluent market as well, as we are seeing the transition of the intergenerational wealth transfer and funds transferring to the younger generation. There is a greater desire for them to be able to self-serve, to be able to see all their investments in one. And as you can see there, they say one of the main reasons they've been dissatisfied is with the service they've received from advisors in the past is the inability to be able to view all of their assets and all of their wealth in the one solution. So as I said, I won't spend too much time on this. I'm conscious of how much time I've got left. But Premium Technology was built in the outset as a software as a service solution that provides reporting on non-custodial assets, so assets held with brokers and directly with managed funds, property and the like. The platform that we offer is built on top of that technology. So whether you've got assets held in a non-custody environment and you want to report on them, or you want to invest in a custodial platform in SMAs, managed funds, what have you, it's all on the one technology. It all is reported through the one investor portal, so the client can see their total wealth, or they can look at individual portfolios as well. And then finally, trust. Nathan talked about that quite a bit, and obviously we all know that trust in that relationship with your client is imperative, and all the reasons we're talking about today, the integration, the ongoing contact with your client and contacting your client in a personalised way is how we build and maintain that trust. But the one thing we want to avoid, and we've all obviously seen quite a bit of this in recent times, is that trust is eroded through a data breach or it's some sort of technological issue that damages the trust that you have spent so long building. One on the right here, you can see that investors are confirming to what we think is true, is that technology is increasing their trust with advisors. So that ability to self-serve, to see their portfolio, that transparency of their portfolio, transparency of information on transactions, fees and the like, really helps to build the trust with their advisor. But slightly disappointingly, I think that 42% of retail advisors say that they do trust their advisor. So I think we've got a bit of work to do there to build that number up. So as I said, the last thing that you need to do, sorry, just quickly, I've jumped ahead too much. One of the key factors as well as part of meeting your FCA code of ethics is to ensure that you are maintaining your security of clients' data. So not doing so will mean that there's potential failure to meet your FCA code of conduct. So it is even more important than it ever has been. So you're looking for technology that has really robust security measures in place, digital portals that you can communicate to your clients rather than sending information through email, which we all know can be highly problematic. Sending information to your client and communicating with your client through a portal that is secure rather than email, and looking for multi-factor authentication wherever possible to ensure that we are maintaining the security of our clients' data at all times. And then finally, I probably have covered it all, and I think I'm nearly finished, Fraser, so I won't cover it. I won't go in much detail. I might just flick to the last slide, and it's talking about the fact that over time, client satisfaction does increase. If you see along the bottom of this graph here, you can see these represent all the different aspects of an advice relationship, whether it be the understanding, the knowledge, the implementation of your advice, the review process. And then the colours represent the period of time that the client has been with you. The top line there, the darkest line, represents those who have been clients for more than 7 years. So we can see that trust increases over time, and it does improve over time. There's certainly areas there where we'd obviously like to see trust increase, but that trust does increase over time. So bringing your clients on the journey and making sure they're with you for the long term is obviously beneficial for all involved, and particularly for the client, because they will then be in a position where they're feeling very confident with you and with their financial state.
Fantastic. Thanks so much, Sam. I really appreciate then stepping in the last minute too.
Yeah.
Amazing job done. I love that predictive behaviors piece of the technology as well, being able to predict client behaviors and give advisors heads up. I think that's great. And of course,
it's quite amazing. The first time we tested it and we asked one of our clients, can you just check? And he went, no, there's no way. And he rang the client, and yes, there was something going on, and they were thinking of closing the account. So yeah, it's been quite accurate so far. It's been around for a few years now, probably 3 or 4 years, but yeah, it's fascinating.
Love the terms hyper personalization. I think that's incredible. I think that's what we all should be striving for, me included, as well as digital empathy. That's a real great one too. I love that term. Welcome back, Toby. Thank you for joining us.
No, thank you very much, Fraser and Samantha. I want to echo Fraser's sentiments that last minute presentations are more than usually
this morning, I think, but yeah, all good.
So thank you for that. And Nathan, thank you for your time. I wanted to touch very briefly on the direct indexing issue, because we ran a round table with S&P Global for a number of portfolio managers last year about direct indexing. It's become a real issue, predominantly tax driven in the US, but thinking about it in the Australian context, where, for example, we don't have the S&P 500, yes, the potential for direct indexing to become a part of the way in which portfolios are delivered to clients, the way in which their goals are met, is something which I'm sure we're going to see enabled by technology, but made part of the managed account experience, and only really possible through those technology-enabled managed accounts. So let's just, Fraser, have a quick look about at tomorrow's closing session with Dr. Michael Collo and yourself.
Absolutely. It's going to be a wonderful session. Michael's got some great presentation, again, using Chat GPT to produce some of the conversations and the slides. So looking forward to his session. Can't wait till tomorrow. And don't forget that the sessions have all been recorded. And so, yeah, if you want to go back and look at any sessions, you can.
Right. So thanks very much. And we'll look forward to seeing you all tomorrow. Thanks very much.
Don't forget to fill out your surveys.
Yes.
See ya.